up, traders? So in today's episode, we are going to be talking about why traders fail. Now, this is very important, especially for beginner traders who are just starting out and kind of want to get their feet wet trading the markets. All right, the first rule why traders fail is they are uneducated. They put their money out there expecting to make millions, and they think it's a get rich quick kind of thing, and it's not. If you were a heart surgeon or a doctor, would you just go operate on patients without any education? No. And stock trading is the exact same thing. It takes time, it takes education, it takes reading books, it takes coursework, chart studies, a ton of other different things. But that's why traders really fail, is they don't know how. It may be kind of obvious, but people don't understand that it takes time. Number two is they don't understand risk. Now, risk management is one of the most common questions that I get. How can I manage risk? And it all depends on your strategy and how you trade. So it's very difficult for me to message someone and say, how many shares are you using on average for each trade, and stuff along those lines. How much is your risk reward ratio? And so a good idea is always to have a 3-to-1 risk ratio. So you risk $1 to make $3. Like in an ideal world, you're gonna find these stocks, but even a 2-to-1 risk ratio, where you risk, or a 1-to-2, I should say, risk ratio is better than a 1-to-1. So you always got to make sure risk is very important, and always to keep an eye out for it. And then the third main reason is traders wing it. And I know you might think, wing it, like what? I don't understand that. And that means they don't, like, they're not passionate about it, and they put their money out there. They look up what people are doing. They're stealing ideas, and that's all fine. No one really cares if they steal their ideas, but they're gonna lose money. If you put your money out there, you have a 50-50 chance of becoming a profit. And yes, you may be profitable, but sooner or later the market is gonna clear out your account. And this really kind of, I don't know if it makes sense, but winging it is not important, or is important. I don't know what I'm saying, but you just got to be careful, and you don't want to overwhelm yourself and kind of put your money out there thinking it's just gonna automatically happen, I guess is the best way to say it. Number 4, now this one is one that I found myself in a lot when I first started trading. Now this is repeating failures. So I thought when I first started trading stocks that I had the perfect strategy, and I could not be beat. And I trade after trade after trade, I would make money, lose money, lose money. I would go one step up, two steps down, one step up. So I thought eventually that I would catch on and become profitable, but I repeated failures, and I came up with a strategy that I had to follow no matter what. I keep it by me on my trading desk at all times. It's right here, my strategy, and it's something that I perfected, and it took me a year, especially when I was paper trading. That is when you guys should be dedicated on finding the best strategy that works for you. All right, number 5 is traders don't adapt, and they get kind of brushed out of the market. So each week it's a different type of market. There are tons of different types of markets. There's a bear bull market, but there's also a deep market, a thin market, a choppy market. And you have to understand what market you're in. And if you're just thinking it's a bear market or a bull market, and you're loading up on trades, you're eventually gonna get you're eventually gonna get kicked out of the market. Not kicked out, but you're gonna blow up your account. So that is very important. They don't adapt and they lose money. The sixth and final reason why traders fail is they believe in randomness. So like I was saying before, when you place a trade, you have a 50-50 chance of becoming profitable. And these traders, they put their money out there with no knowledge. So that's the first thing, no education. They don't understand their risk. So they're random traders. You find these all over the stock market, these types of people, and they want to be a trader, but they don't want to take the time and dedication that it takes to, learn all the different types of strategies, patterns, stuff like that. So that is it, though. That is the main reason why traders fail in the stock market. So thank you guys for watching. Go down, hit the subscribe button, or hit me a big thumbs up. I would greatly appreciate it. Leave a comment and let me know what I should talk about next on Carter Farr Vlogs. Peace out. Remember to always stay happy and stay positive. Goodbye.